There seems to be a lot of unrest in the world, and I guess that brings a certain level of uncertainty with it. We've got wars going on, we've got record low unemployment, but many families, for example, are still struggling to pay their bills. The cost of living is soaring. Interest rates are going up, but keeping any of your spare money in the bank means you actually go backwards after inflation. Then we've got the stock markets. They've fallen, they've risen, and of course they could fall again. In fact, most investment markets have actually been under the pump. And that volatility, that move in prices, scares many investors off. Well, my next guest is someone who spent his entire adult life working in the financial markets for some of the biggest players in the world. Dan Annan is now the CEO of Australian-based Cosmos Asset Management. I'm delighted to say he joins me now. Dan, welcome to Bernardi. Now, everyone seems to want to buy investments when they're doing well, but few seem to like bargain hunting when markets are down. This is an interesting psychological phenomenon. How do you explain it?
Look, I mean, first off, thanks for having me. It's one of the key components of investing, right? The simple game of investing is buy low, sell high. But as you point out, the psyche or the human nature and emotions of investors is to do the opposite. And it boils down to the good old concept of fear and greed. Generally speaking, people like to chase returns. And so when the markets are going up, there's this desire to participate because they don't want to be left out. And when it turns, there's the fear. It's like, oh, what's happening? And then they get out. And so there's that constant cycle of buying high and buying low.
And this is a huge challenge, of course. I mean, successful investors master their emotions, but they also pursue particular strategies, don't they? It's about whether it be diversification or they try and pick specific stock winners. What's, in your experience, the recipe for success for the long-term investor to secure their financial future?
Yeah, I mean, look, studies have shown that asset allocation contributes 90% of returns in a long-term portfolio, right? Really, so it's all about understanding your risk, understanding your asset allocation, and the instruments that you put in there, right?
So it's about having a little bit in a lot of different pies, and that somehow works better than almost anything else. Is that right?
Yeah, precisely. So if you have an asset allocation, a diversified asset allocation portfolio, when the markets sort of are moving in various directions, you tend to have a smoother ride.
Okay, but this is what intrigues me. You've worked for some of the biggest financial institutions in the world.
Yep.
Right, there'll be household names to many. I'm not going to mention them now. But you've since gone to this outfit called Cosmos Asset Management.
Yep.
You are focused almost entirely in this new digital asset space of cryptocurrencies and crypto miners and ETFs, which are now listed on the Australian Exchange. Why did you make that move?
Look, I mean, the key there is, like, you know, if you think about where we're going globally, we're moving into a digital economy. And what the blockchain technology is delivering through the digital assets or cryptocurrency is basically positioning this asset for us in the future. I mean, if you think about it in simple terms, you know, today most of us walk around with an iPhone or some sort of digital device. When we go to the store to pay for, you know, goods and services, we're using that digital device to make the payments. If you think about the next generation and those that are coming up, they've been in this space of trading and paying with goods and services and tokens for years.
Yeah, that's
right?
very true.
And we're talking about these kids that are playing video games, and then they're getting, you know, cash from mom and dad, and they're buying the tokens, and then that's how they're interacting, right?
So it is the future, isn't it?
Yeah. So the future, I mean, like the future, if you think about where we're going and what the setup is today, the future, I think in the future you'll see less transactions with, you know, whether
with cash.
Yeah. Generally, that's already gone. But then the blockchain technology that's in place today, and if you think about the blue chips leading that, I mean, that's Bitcoin, it's Ethereum, you know, those will have a play or a place in the future.
Okay, two quick questions for you, and I know I get this a lot. You talked about asset diversification. So how much should a professional investor as you say people should have dedicated to these new digital assets? And secondly, how can people be assured that they're safe. We keep hearing these things about theft, and once you lose your keys, you lose your coins and things like that.
Yeah.
So can you address those quickly for me?
Look, on the safety front, one of the key reasons what attracted me in building this business and looking at cryptocurrency and ETFs was precisely to address that. Because what the ETF or exchange traded fund gives you is a familiar ground in trading shares with this new asset class, right? So your assets are custodied with the banks, just like you trade CBA or any other stock. The service and security that you get is similar, right? Now let's talk about the concept of risk and asset allocation. What percentage should you use in a portfolio? What we've looked at is in the traditional 60-40 portfolio, a 2 to 5% allocation should do it for this asset class. And you have to have a long-term view for the asset because, and I've said this time and time again, and we're going through that cycle now, this is a volatile asset. It's going to go up, it's going to go down. And if you have the right asset allocation in place, this is a good buying opportunity.
Dan Anand, thank you so much. CEO of Cosmos Asset Management. Really appreciate you joining me on Bernardi tonight.
Thank you.